Hello students. Uh, in my last video, I have given you the introduction to the stock market indices. Stock market indices, they act as a barometer of the stock market. That is, they reflect the stock market behavior. So there are so many stock market indices in our country like BSE Sensex, BSE 200, Dolex, NSE 50, Chrysler 500, Business Line 250 and RBI indices of ordinary shares. These indices will provide a broad outline of market trend, that is whether the market is moving upward or downward, and they represent the market. The general movement of market is typically measured by indices representing the entire market or important segments thereof. And there are two types of types that is followed for measuring the stock market. One is price index and the other is the wealth index. And coming to the usefulness of stock market indices, they help to recognize the broad trends in the market. It can be used as a benchmark for evaluating the portfolio of the investors. They function as a status report on the general economy. Impacts of various economic policies are reflected on the stock market. The investor can use the indices to allocate funds rationally among the stocks. To earn returns on par with the market return, you can choose the stock that reflect the market movement. Index funds and futures, they are formulated with the help of these indices. Fund managers construct portfolios to identify any one of the major stock market index. For example, ICICI has floated ICICI index bonds. The return of the bond is linked with the movement of the market or the index. Technical analysts study the historical performance of the indices and they predict the future movement of the stock market. The relationship between the individual stocks and index predicts the individual share price movement. So, you should be knowing how to calculate the stock market index. So, as I told you already, it may be either a price index or wealth index. The unweighted price index, it is a simple arithmetic average of share prices with the base date. And this index gives an idea about the regular price movements of the constituents and it reflects the total market. In wealth index, the price are weighted by the market capitalization. Let us understand how to calculate the index with an example. Consider an index which is constructed with three scripts X, Y, and Z. The equity of company X is rupees 100, that par value is rupees 10, market price of this script is 20, and company Y, the equity of company Y, rupees 200, par value is rupees 10 and market price is rupees 30. Equity of company Z, it is 250, par value is 10 rupees, market price of the script is rupees 40. How to calculate market capitalization? Number of shares into price of shares. Number of shares of equity X is 100 and the price of share, that is the market price of share, is 20. Now the market capitalization of equity company X is 2000. The market capitalization of company Y is 20 into 30, 6000, and market capitalization of company Z 250 into 40, 10,000 is the market capitalization of these three companies. And the total market capitalization is 12,000 plus 6,000 plus 10,000, which is equal to 18,000. So base year index, that is during the base year, is taken as 100. Now, market price at n plus 1 year or period is X is rupees 25, company Y price is rupees 40 and company Z price is rupees 50. Now the aggregate market capitalization is 1000 into 25 plus 2000 into 40 plus 250 into 50, which is equal to 23,000. So now the Sensex is, that is the index is calculated as index at period n plus 1 is index at period n plus 1 by index at period n multiplied by 100, and now the Sensex is 127.78. This is how the BSE Sensex is also calculated. So hope you understood how to calculate the market index. So I told you there are different market indices like BSE Sensex, Nifty 50, BSE 100, Dolex, etc. There are some differences between these indices based on different factors. That is the number of component scripts. The indices, the number of stocks in an index will influence the behavior of that index. If the number of component stock is higher, it would be representative sample capable of reflecting the market movement. The Sensex has 30 scripts, as it is similar to Dow Jones Industrial Average in the US. BSE 100, it has 100 scripts. BSE 200, it has 200 scripts. The Dolex, it has 200 scripts. The RBI index, it has 338 scripts. And Nifty 50, it has 50 scripts. Even private organizations like CRISIL also has constructed its own index and named it as CRISIL 500. So from this, it is clear that the number of scripts differs from one index to another, and hence the movement also vary. The BSE National Index is considered to be most representative than Sensex because it consists of 100 stocks. Out of 100, 22 are quoted on BSE Sensex and the rest are listed in BSE and other exchanges. That is how the index differ. The performance or the movement of the market or the behavior of the index will change. Composition of the stocks also makes the indices to differ. That is, composition of the stocks in the index should reflect the market movement as well as the macroeconomic changes. The Center for Monitoring Indian Economy maintains the index. It often changes the composition of the index so as to reflect the market movements in a better manner. Some of the scripts traded volume may fall down. At the same time, some other stock may attract the market interest. In such a case, the script that has lost the market interest should be dropped and other must be added. Only then the index would become more representative. In 1993, Sensex dropped one company and added another. In 1996, Sensex was thoroughly revamped. Half of the scripts were changed. The composition of Nifty was changed in April 1996 and 1998. So, for the index to be more representative, it has to be appraised and it has to be revised. The composition of stock have to be revised. And weights also makes the indices to differ. The weight assigned to each company's script will influence the movement of the index. The indices may be weighted with the price or value. The Dow Jones Industrial Average and Nikkei stock average of 225 scripts of Tokyo Stock Exchange. They are weighted with price index. In the price weighted index differs from the wealth weighted index. In the value weighted index, the total market value of the share is the weight. Most of the indices all over the world and even in India, except Economic Times Ordinary Share Index, are weighted with the Wealth Index. Then the base year. The choice of base year also leads to variations among the index. The base year differs from each other in various indices, and this base year should be free from any unnatural fluctuations in the market. If the base year is close to the current year, the index would be more effective in reflecting the changes in the market movement. At the same time, if it is too close, the investor cannot make historical comparison. The Sensex has the base year as 1978-79, and the next oldest one is the RBI Index of Ordinary Shares with 1980-81 as the base year. That is different. Index has different base years, and hence there will be a difference in the indication of such indices. In Indian stock market, there are so many indices that have been formulated and followed, like the BSE sensitive index, BSE 100, BSE 200, Dolex 200, BSE 500, uh, S&P CNX Nifty, CNX Nifty Junior. There are wide variety of indices, and the most commonly followed indices in our country is the BSE sensitive index, which has long been known as the barometer of the daily temperature of the Indian stock exchanges. In 1978-79, stock market contained only private sector companies and they were mostly geared to commodity production. Hence, a sample of 30 were drawn from them. With the passage of time, more and more companies, private as well as public, came into market. Even though the number of scrips in the Sensex basket remained the same, 30 representations were given to new industrial sectors like services, telecom, consumer goods, two and three wheeler auto sector. The continuity and integrity of the index are kept intact so that a comparison of the current market condition with those of a decade ago is made easy and any distortion in the market analysis is avoided. The qualitative and quantitative criteria adopted in the selection of 30 scripts are listed in the BSE Sensex. NSE 50. This index is built by India Index Services Product Limited and Credit Rating Information Services of India Limited. The CRISIL has a strategic alliance with Standard Poor Rating Services. Hence, the index is named as S&P CNX Nifty, and it was introduced in April 22, 1996. And the objectives of this is to reflect market movement more accurately, to provide fund managers a tool for measuring portfolio returns, that is the market returns, to provide as basis for introducing index based derivatives. It replaced the earlier NSE 100 index, which was established as an interim measure till the time the automated trading system was stabilized. And there has been a recast of basket of Nifty stocks, and the new basket came into effect on October 9, 1998. The selection criteria, the liquidity, the base period differs from the BSE Sensex. CNX Nifty Junior. It also consists of 50 stocks, but these stocks belong to the mid-cap companies. Stocks that are having market capitalization greater than rupees 2 billion are included with the objective of measuring the performance of stock in the mid cap range. The liquidity criteria is same as that of CNP Nifty 50, S&P CNX Nifty 50. The impact cost should not be greater than 2.5% for 85% of the traded days. There is a recast in the Nifty Junior in 1998 with the number of stocks going up to the Nifty. The composition of the Nifty Junior has also been overhauled. S&P CNX 500. It is a broad-based index consisting of 500 scripts. The companies are selected on the basis of their market capitalization, industry representation, trading, interest and financial performance. The market capitalization is used as weights. The company's influence on the index depends upon their market capitalization. The companies selected are either leaders to representative of their industries. They should reflect the movement of their industry. The industry groups included in S&P CNX 500 are 79. The number of representation from each industry group is changed to reflect the market. The selected company should have minimum record of 3 years of operation with positive net worth. The base year is 1994 because it is considered to be closer the post-liberalization era. Since the index is a broad-based one, it represents 72% of the total market capitalization and 98% of the total traded value. As it is weighted with market capitalization, it mirrors the market movement more effectively. The broad base of the index provides a benchmark for comparing portfolio return with market return. So students, so far in all the videos, the topics that we discussed would be clear to you. All topics are discussed in detail, like we have discussed starting from the investment, the meaning of investment, different types of investors like speculators, gamblers, investors, and the difference between these. We also discussed about the many different types of investment avenues available for investments. We discussed about the process of investment. We also discussed about the primary market and secondary market, the primary and secondary market instruments. We also discussed about the functions of primary market, secondary market, and also we discussed about the stock market indices, which is very, very important, that represents the performance or behavior of the entire market. Thank you so much for your patience listening. So I would be starting with the risk and return concepts in my next video. Thank you.